I know that. We wait for him to. This is how we.
I love
Fucking
you.
villain.
I love
Yeah.
you.
No.
I love you.
Oh, look at that. Look what he's doing. Look what he's doing.
Yeah, it's insulting.
I love you.
It's very patronizing. It's a terrible way to start the show. Everybody who just listens, like tuned in right now, is like, what is that guy doing?
It says I love you.
No, I get the hand gesture that most people can't see.
They can see. Come to the YouTube channel.
All right. Welcome back to the #1 financial literacy podcast in the world.
Welcome back, everybody.
Despite that awkward start, that's who we are.
Yeah. That is who we are.
Who we're supposed to be, I should say.
Mm-hmm.
I will admit I am feeling very much under the weather, so you might get a little bit of a different sound out of me today. Lots of nasal and all that congestion. So it's not because I'm drunk, I promise. And if I was, I'd be drinking more, so you would know.
Right.
Saied and I have been having multiple conversations with Arun about this whole Titanic catastrophe that's been all over the news. And we thought, despite that we're a financial literacy podcast, we would address some of the things that we thought we've heard before we start the show.
Yeah.
After that, of course, we'll jump into the typical stuff. Jerome Powell, he expects more Fed rate hikes.
Back at it again.
Says some very contradictory things, however, which Saied will note for us all.
Yeah, he was in front of the House and the Senate this week.
Now, I will admit, I openly hate Senator Elizabeth Warren. She does blame a lot of people, and she likes to look in hindsight with this 2020 clear vision. But sometimes she presses people in a way that actually gets them to say stuff. Now, I'm not going to say the way she acts is good.
Right.
I'm not going to say I'm a fan of hers.
Right.
But sometimes the pressure that she exerts on people in public settings, like Jerome Powell, who was in front of Congress, can get you some interesting answers. And I think we got a video which highlights that.
Right. Very uncomfortable.
Very, very uncomfortable.
Yeah.
Yeah. She is aggressive.
I mean, she married?
She's got to do that at home, right?
Has to.
Yeah. Why didn't you take out the trash, Saied?
Why didn't you mop the floors, Chris?
I know I told you before you left. Are you not accepting responsibility for not taking out the trash?
What time did you get home today? How long has it been since you've been home?
I don't know.
What did you do from now until then?
I'm not accepting responsibility. I'm trying to move forward.
Okay.
That's a direct quote, everybody.
Yeah.
We're going to talk about jobless claims at its highest level since October 2021. Interest rates, we're going to talk about the interplay between that and home values. There's been some interesting charts we have to show you, one of which I think will show you the year-over-year price declines, which, remember, a few shows back, we told everybody don't celebrate this 2 months of subtle price growth.
Yes.
And now we're seeing the data come out as to why we said that. But there's a chart in that same article which I think is more indicative of what we should all be looking at to see the next signs of impacts to the housing market. And spoiler alert, it's not really price. It's not really supply and demand. It's about transactions and volume of transactions.
Yes.
And I got a chart which I think will break that down very well.
All the charts. But where are you going to go to see that chart?
You're going to go to a number of different places. First and foremost, you want to go to YouTube.
Mm-hmm.
You want to go to YouTube, look around this sexy, well-built channel.
It's so good.
You know, and you want to admire
the chapters,
the time, the energy, the chapters, the quotes and the cards that Arun so lovingly and painstakingly timestamps during the show for you to enjoy.
He's been doing a really good job.
He really has. He really has.
Thank you, boys.
Arun, when I was up at 4 o'clock in the morning last night because I couldn't sleep because I felt like ass, I was all like, oh, I'm going to go through this and I'm going to timestamp everything.
Mm-hmm.
And then I realized that they were all there. And I'm like, I love him.
Your love grew for him a little bit.
I love him so much.
Right.
But it saved me a tremendous amount of time, so thank you for that. And then if there's time, we'll wrap up the show talking about existing home sales unexpectedly approved in May amid multifamily gains, which is a bit of a kind of a wrap-up of everything else that we're going to be talking about leading up into that.
Yeah.
But before we go there, man.
There's no way we can not address this.
Yeah. Let's be clear up front. This whole submersible tour of 5 people, they lost their lives.
Mm-hmm.
It is incredibly tragic. There are no jokes that I think should be made, but social media is like wildfire with just fucked up comments.
The internet is ruthless.
Ruthless. And I think I was talking to somebody casually today, and they asked me why I thought social media was so carefree. And I said, well, they're hiding behind usernames, right? Not their real names. They're not in a real conversation.
Right.
and they're trying to make quippy comments. But I think it comes down to, and I'll use myself as a proxy. There are people who just don't like bankers. You're a banker, you're running a Ponzi scheme, or you're part of the Illuminati. Like, I hate you.
Yeah.
Like, I'm a crypto guy. Fiat currency is the devil. You're supporting that ecosystem. You're the devil.
When do you think that stigma really started to gain traction about bankers? That had to have been before the '08 the Great Recession, right?
Well, similarly to this, I think there's always been a natural disdain for the wealthy. I think that there's a bit of the FOMO almost on some level.
Mm-hmm.
And I by no means think that I am wealthy, because I know above me is such a massive cliff of way more wealth than I've ever experienced.
Yeah.
So I think it's all relative, frankly. Like, the perception of wealth is kind of a weird thing.
Mm-hmm.
Arun wants us to comment. Mention today's date. Today is June 22nd.
Thursday.
And
yeah.
how the show will be live on Tuesday, 5 days after the news breaking today.
Right.
You're welcome.
I mean, this has been in the news now for a couple of days, but so this may be
Yeah.
stale.
Yeah, by the time the audience hears it, it'll be 5 days
Well,
later.
I mean, we'll know what happened, but there are parts of it that I don't think are ever going to be stale. Like, I think we've gotten so desensitized as a society. To answer your question, there's actually a whole conspiracy theory around the Titanic. So the Titanic sailed right about the time that some of the wealthiest families in the U.S. government were talking about implementing a central bank.
Mm-hmm.
The wealthiest man in the world and two other very, very wealthy individuals were on the Titanic.
And how did they gain their wealth?
One of them was, I believe, real estate?
Well, it was mortgages, right?
Mortgages. He owned 40% of the mortgages in the United States. That's right.
One person owned 40% of the mortgages.
Yeah, he was wealthier than the J.P. Morgan, and the Vanderbilts, and the Rothschilds. Now, the Vanderbilts, the Rothschilds, and J.P. Morgan all preferred the idea of a central bank.
Yes.
But the three other individuals and several of the people that were on the Titanic did not. And they were very vocal about not wanting this.
And the conspiracy theory went on to say that those individuals, the other wealthy individuals, were supposed to be.
Not supposed to be. They all had tickets.
Yeah.
So J.P. Morgan, the Rothschilds, the Vanderbilts, they all had tickets to go on the same Titanic cruise, but none of them showed up.
Yes.
But everybody who supported the idea of a central bank did show up. The Titanic goes down. The U.S. government forms a central bank. J.P. Morgan goes on to be the biggest bank in the world.
I mean, it's really hard to fact check this too.
It's impossible to fact check it, and
I mean,
every time
if you look at, like, for instance, if we're going down this conspiratorial rabbit hole, you look at a guy like Bob Lazar.
Bob Lazar, interesting choice.
Who claims to have worked at Area 51 or the other version that's, like, down the street.
I got to tell you, I've been like a quiet, like, UFO fanboy for probably the greater portion of my life.
Right.
When I would drive back from USC at night, back home, like after a long day of classes, because I didn't live there, I would notoriously listen to KFI AM 640, and Bob Lazar was often spoke about, and it was George Knapp, who works with Jeremy Corbell.
Right.
And George Knapp took the place of another guy who was an older gentleman who's retired, I think, years and years and years ago. But that's all he used to talk about at night on an AM radio show.
Right. And you look at his story, his entire identity is wiped. All the places he claims to have gone to school, there's no traction, or there's no record of it.
Well, you know, so Jeremy Corbell dug into Bob Lazar. Have you ever seen the Netflix documentary?
I saw the Netflix documentary and the deep dive, like multiple.
There are photos of him there.
Right, right, and he actually describes facilities and how they were, and it checks out to the T. You
I
only know
be
that
this guy, bro. I can't. I want to do the nice thing for you right now.
What I do?
You got something in the bottom of your teeth.
Oh,
you do. You use your phone, take the camera, flip it towards you.
Come on, man.
It's right there in the middle, bro. You thank me later.
Oh, you waited 10 minutes to tell
dude,
him?
you
No,
saw,
I just saw it now.
It was before you saw it before the show.
No,
Come
I
on,
just
dog.
saw it now. I would tell you before the show started.
This guy.
I would tell you before the show started. I couldn't let you go the whole show.
Okay. But Bob Lazar, his whole identity and every record of him being anywhere has been wiped.
Yeah, the government and look.
So like it's hard. My point in bringing him up is, if you wanted to fact check him, you couldn't, because if the history is wiped, then there's nothing you can do. Right?
Well,
it completely discredits.
Yeah, and that's the problem of not having information and internet and a lot of the access that we have now.
Mm-hmm.
But when you have the access that you have now, you can get news like this, and this is this is an article I saw, or not article, it's ABC News, and I saw this interview of James Cameron. I didn't know this, but James Cameron, how many times do you think he went down and saw the Titanic?
I don't know.
I thought it was
33.
one time. Oh shit!
He went down 33 times. This
Wait.
clip, he talks about it.
What do you mean by going down? So I thought it was impossible to go down to the Titanic. That's not the case?
No. That's what these guys were doing. What are you talking about?
No. So they were trying to do, right?
No. They've gone down there before.
Oh, okay. I didn't know that.
Yeah. So the reason why this submersible was so, I guess, sensational
Okay.
was this is the only one that's never gone through the voluntary tests to make sure you have safety protocols there. And there's some very key.
Why would anybody do that, though?
Because the guy who ran the business, CEO who passed away, he was on this.
Mm-hmm.
He was kind of an outlier. He built a hull made out of composite material like carbon fiber and surrounded by titanium.
I would never get on a plane because it didn't pass any involuntary tests, let alone a submersive.
This is and James Cameron in the same news report goes on to talk about he designed his own submersible to go down there, and then he also went with the Russian team that's now I think retired. 33 times he went down there and came back up. But they had protocols in place that were stunning. Like they would never go down with one submersible, they would go down with two.
And this was before the movie The Titanic?
This is how he got familiar with Titanic and got clips and got interested in it.
Yeah. I didn't know any of this.
Wow. Oh, yeah. So when the Titanic movie was made,
Mm-hmm.
he spent years studying the actual wreckage of the Titanic, the history.
It makes the movie that much better. Wow.
And that's who he is. That's how eccentric he is with like Avatar and all that stuff. He spends years doing all this stuff.
I know, like 10 years in the making, right?
Yeah, he's a really bizarre dude, but I mean, you got to have a weird obsession to be able to do it the way he's doing. But he makes interesting points. He's like, look, they should have had a machine which dispels carbon dioxide in there.
Mm-hmm.
So if you get stuck in the thing and you guys are breathing, you have an oxygen supply, the carbon dioxide buildup is what kills you.
Yes.
You should have had a machine which dispels it. They didn't have that. He goes on to cite like 1,000,001 different things, which is really interesting. But so that submersible right there, I think, is one that he helped build.
Mm-hmm.
And it's got a composite hull, and it's composite meaning plastic acrylic, right? And it allows them to go down deeper. Just like see much of a viewfinder that there is there.
Yeah, and the viewfinder that they were apparently supposed to have was how big?
It was tiny, and it wasn't even built for the depths that it was going to. So I mean, play the clip. It's really fascinating to see what he has to say about this, given that he's been 33 times he's been down there,
right,
successfully. Go ahead and play it.
Speaking of James Cameron, another person closely familiar with the Titanic is the director, James Cameron himself, along with his Oscar-winning movie. Mr. Cameron, I understand you've made a number of dives to the wreckage site, too. Just give us your sense on what you're feeling right now, looking at these images of the shipwreck that you studied so closely, and now hearing that another tragedy has been tied to the same area.
Well, I've been down there many times. I know the wreck site very well, as does my friend Bob Ballard. I've made 33 dives. I actually calculated that I've spent more time on the ship than the captain did back in the day. And of course, as a submersible designer myself, I designed and built a sub to go to the deepest place in the ocean, 3 times deeper than Titanic. So I understand the engineering problems associated with building this type of vehicle and all the safety protocols that you have to go through. And I think that what Bob said, because I was watching, is absolutely critical for people to really get the take-home message from this, from our effort here, is deep submergence diving is a mature art. From the early 60s, where there were a few accidents, nobody was killed in the deep submergence, until now, is more time than between Kitty Hawk.
Arun's got an article coming up. Let's
Let's
pause right there. Pause that, Arun.
Because there are different.
Okay, or not. That's good. He freaked out. So here's what I'll say is that there's an interesting part of this that he doesn't really talk about in this interview that I think is worthwhile to note. If there's a slight indention in the hull of this thing.
You were mentioning to me earlier today the size of a nickel.
Yeah. If that's how small it is, and that's the infrastructure is so fragile, that thing can collapse. So they've already got a little bit of information that they've been able to recover from this. Number one, apparently the Navy had sound detecting equipment in the waters, but they didn't want foreign countries to know their capabilities. But it's since come out that they heard some type of implosion shortly after they lost contact.
Wow.
So the odds are this thing imploded. Now, there's also some evidence to suggest that they were trying to get back up and they had released their weights and were trying to get back up.
Mm-hmm.
But good or bad as it may be, the implosion of this thing was interesting. It was really fascinating to read about, and I spent a lot of time going down the rabbit hole. It's like 32 tons of pressure,
Mm-hmm.
and that thing effectively would smash together flat. I mean, there's no amount of resistance in the world that would prevent that from happening.
Yeah.
If there's anything to take solace in, I think these guys probably died instantly.
Right. It was sudden.
It was sudden. Now, though, what sucks is this thing had hull detection information. So there's sensors on the hull to let it know when it's deteriorating.
So it may have been going off.
So it may have been going off. They may have dropped the weights. May have been trying to get up.
Let's just hope not.
And then it smashed, and that's what happened.
Somebody at the office was telling me that it had gone offline for about 8 hours at some point, whether that was before the implosion or not. I mean, 8 hours before they told anybody it went missing.
Well, 8 hours before they told anybody, but the Navy was alerted like the second they went out of contact. And the Navy had told them well before that 8 hour period that we heard something.
What?
But it wasn't like a public thing they could talk about.
Ay.
So yeah, I mean that's what's coming out at least at this point. And he goes on to talk about it. James Cameron goes on to talk about how he knew.
That's terrible. Yeah, he went on to say that he was notified, right?
Mm-hmm.
Yeah.
So everybody's been talking about it. I think it's really tragic, and I didn't want to like start the show and not acknowledge that that's kind of taking over the zeitgeist right now.
That's all anyone could talk about.
Yeah. But I'm fascinated by it. In my mind, I think this is more dangerous than space travel.
I mean, there's so much unknown, right? Yeah.
Well, and then when you think about it, there's no light down there. There's no way to communicate down there. There's no.
I personally don't see the draw.
Yeah, I don't get it either. So if you could only look through a window,
Mm-hmm.
like a tiny window,
And apparently they had a screen as well.
they have a screen inside that you can look at the cameras. Why not just get a nice yacht? You guys are all billionaires.
They probably have one.
Go up to the top of the water, right?
Right.
Stay on your yacht, and then you switch taking turns of control of a drone underwater,
Right.
which may or may not be able to reach down there. I mean, I get that there's
I'd rather try that though.
right, and I mean it's
That'd
safer.
be kind of cool, right?
Yeah,
Flying around a little drone in the ocean.
but you can see where it's going.
Yeah.
I don't know why you would physically want to go down there, and it seems kind of crazy. And I think that's where all the jokes coming from.
Yeah.
So.
That's unfortunate, man.
Well,
What else is unfortunate? Boy Powell in front of the House and the Senate this week, doubling down.
yeah. You know, I've been so busy in the office lately that I hadn't even kept up. I didn't know he was going to do this, and then I saw this pop up on television,
Mm-hmm.
and I was stunned.
Right.
And we talked about in the previous shows how the tack the Fed had taken here is different.
Yes.
So in the 1980s, when Volcker was in office, it was 50 basis points, 50 basis points, 50 basis points, 50 basis points.
Right.
Arun, go back up to the top there. Thank you. And in the 70s, it was 25 basis points, 25 basis points, 25 basis points, and kept going.
Mm-hmm.
Just to recap how we got here. March of 2022, 25 basis point increase.
Mm-hmm.
May of 2022, 50 basis point increase.
You can start to see the shape of the bell curve.
Yep, exactly. June, July, September, and November, 75 basis point increases. December, 50 basis point increase.
Coming back down the bell curve.
February, 25 basis points. March and May, 25 basis points. June, pause.
So if you really believe that, if you were one that believes the Fed has always in their mind felt like the target rate was going to be 5.5 or 5 3/4,
Mm-hmm.
then this is theoretically the way they're going to do it if they're following the bell curve.
So what's inflation at right now?
Inflate CPI or PCE. So
Start with CPI.
core PCE for the last 4 months has been around 4.7%.
Okay. And that is our preferred metric.
Core PCE.
Right.
And that's coming out again at the end of this month, I believe the 30th.
So traditionally speaking, when the Fed funds target rate is above inflation,
Yes.
you have sufficient downward pressure to drive inflation lower than where it is today.
Yep, and we'll get into what he had to say about that.
Well, let's get into it. Powell expects more Fed rate hikes ahead as inflation fight, quote, has a long way to go, end quote. This from a CNBC article.
Right. So I went on. I tuned in because I love me some JP from the hood.
He's very hateable. I think it's his mannerisms.
He's very stoic.
He's very stoic, doesn't show any type of emotions, which I guess in his job is probably a good quality to have.
But we were having this discussion before the show that I think that he's well done, sir.
Thanks.
Is that a beer?
Energy drink.
Okay.
That was that. You know what that means? He's like, you guys are boring. Let me get this energy drink.
Yeah. I'm low on gas tonight. I'm sick as hell. That's what it is.
So I think that he hasn't surprised the market at all. Think about it. We've been able to predict every single FOMC meeting.
Okay, but I take a little bit of objection to that. Okay, so right out the gate, he's been very transparent about what he wants to do
And what they're going to do.
and what they're going to do as far as future rate hikes go.
Yes.
But he hasn't explained why he and the FOMC think this economic theory, this bell curve type increase structure, is necessary relative to the past.
Right. You're right. He hasn't explained the need for the 475 basis point increases.
We've never done that in history. Why not just give us a little insight as to why even the FOMC minutes don't discuss why they think that number is necessary?
Right. Is it really the only thing that could possibly explain this? Right. The only explanation is a real fear of hyperinflation.
Which again, you had worse hyperinflation in the 80s, and they were very consistent, very methodical, and they took their time. And
it was a different time, though.
Which is fine. But then explain that. You can't tell everybody, hey, I'm going to do X, Y, and Z. Just deal with it.
Right.
You owe us, the consumer, the courtesy of explaining your logic.
So then it also falls on the shoulders of all of the reporters that are at the post-game press conferences. He sits there and he answers the questions.
Yeah, and nobody's asked those questions, and I'll give you that. I don't think I've heard anybody kind of address that. But what people have asked, and what Elizabeth Warren will talk about later on, and we'll get into it, is she's asked, everybody's asked, like, hey, like, you did this, didn't you?
Right.
And he refuses to accept his role in doing this.
So this is a quote from JP in front of I can't remember if it was whether in front of the House or the Senate Banking Committee. At both of them, they're addressing the same thing, right?
Yeah.
And this is the quote. In light of how far we have come in tightening policy, the uncertain lags that which monetary policy affects the economy and potential headwinds from credit tightening, the FOMC decided to maintain the federal funds rate at 5 and 5 1/4, and to continue to significantly reduce their security holdings. Nearly all FOMC participants expect it will be appropriate to raise interest rates somewhat further by the end of the year.
Okay, so right there,
got a problem.
A lot of contradiction.
I got a lot of problem with a lot there.
Okay, I'm gonna go on a limb and just say this right now, right off the gate. I'll get to the end. I'll get to the conclusion. We can unpack it.
Okay.
Why are we still talking about federal interest rate increases when he knows there's lagging indicators?
He openly
acknowledges that we haven't seen everything move. And again, core concept of monetarism, which frankly this economy is based off of, Milton Friedman, is you cannot lead by your desires. You got to lead by with the data. And he's openly acknowledging the data hasn't come in that they need to respond to.
Exactly. And then furthermore, so to double down on the dumbassery, okay, he goes on to say and acknowledges that the belief of housing inflation will be coming down over the course of this year is very high because of housing and shelter. Admitting that he understands what we've been talking about on the show.
Yep.
We've been talking about how the data from the 6 different panels comes in every 6 months, acknowledging that by the end of the year, that portion of the report, which we've said is the largest component of CPI, right, and inflation, roughly around 34%. That's going to
I have arguments about this every fucking day of people in my DMs. Every fucking day.
That's going to significantly come down, right, because those are based off of executed contracts, and they're reported every 6 months.
I don't know why the Fed's not talking about quantitative tightening. That's what they should be focusing on now.
Yeah.
Stop focusing on the Fed funds rate, okay?
Yeah.
Focus on pulling the liquidity out of the system.
Yes.
That's what you should be focused on. That's what you should be talking about. That should be your priority.
So if you're saying that housing is going to come down, which is the largest component of the report, and you also saying in the same breath you understand the lags in what the interest rate what they've done so far,
Mm-hmm.
then why in the hell are you going to skip and raise in July? Wait. Just wait and see.
Yeah. I think he was clearly trying to crush the optimism in the markets because it's like honestly saying like, fuck it, we're not winning.
You're right.
We're not winning. We're not getting it drilled into their heads.
Well, it's not just that he's upset, right? So I guess I had a report in the show notes, or an article, I'm sorry, from the Wall Street Journal, that went on to say technically the S&P 500 by technical definition is in a quote unquote bull market.
Yeah, no, and it's gone back and forth.
Right, it's gone back and forth, right? And so that's got to be very aggravating for him and the FOMC members.
Yeah, but see, this is the problem that I think most people have with the stock market, and honestly, really seasoned investors fuck this up all the time.
Okay.
The stock market is supposed to be logical.
Okay.
There's not supposed to be an emotion in it.
Okay.
But the fact of the matter is, behavioral economics, emotions, perspective, things like greed,
yes,
drive the market.
Mm-hmm.
And sometimes you can do all the right things as a company and have your stock price go the other way. You can do all the wrong things as a company and have your stock price. GameStop.
Yes. GameStop is actually, I had it in here. It's up, let me see here. I think it was up 20% or so. No, sorry, 32% since the beginning of the year.
Does it
Why?
make sense?
No, it makes zero sense.
But that's the irrationality built into the market. You cannot look at price in the markets, in the market as a whole, in the indexes and say, okay, this is something that I'm going to try to beat back down.
Right.
Here's what Powell's missing. Nothing you say is going to drive the optimism out of the market, because people are saying openly with their predictions of the market right now, fuck you, Powell, we don't believe you. We believe you're going to cut rates. And I'll never forget, I went on somebody else's podcast over a year ago.
Yep.
And they told me at the end of 2022, he vehemently believed the Fed was going to cut rates. And I'm like, he's saying he's not. I think it's going to go through a much higher cycle.
Yeah.
And if you look at the rates back then, I mean, so going back to the chart that we talked about in the beginning, May of 2022, June of 2022, July, September, November, October.
So roughly around 4.5 or
right?
so. No, 4.25 maybe.
Those are all rate increases, right?
Yeah.
And by December, at the end of the year, they were still increasing 50 basis points.
Yeah.
And the optimism, you can't beat out of people. You gave them 14 years of the most prosperous economic period they're probably ever going to experience in their adult lifetimes.
Right.
Some of them only grew up knowing this.
Right.
And you want to try to verbalize like the concern by, oh, we're going to keep the foot on the pedal. We're going to, you know what's going to change the markets? That lagging data that you refuse to let do the job for you.
Right. So just to circle back real quick, given that this is a financial literacy podcast.
I feel very literate.
No, you are. But the definition of a bull market is a 20% increase in a broad market index over a 2-month period.
Which, ironically, is also the same in the opposite direction for a, quote, crash, 20% down.
Or a bear market.
Yeah.
Yeah.
So you'll find that 20% is kind of usually your barometer for great market, bad market.
So, yeah. Those are the terms. The only reason why I'm bringing this up now, we know, typically speaking, when people are saying bull market, is like there's a lot of optimism. If there's a bear market, there's a lot of negativity, a lot of instability.
Another rumor I've heard a lot online recently as it relates to all of this is I've been trying to explain to people that the Fed funds rate is the cost for banks to borrow money. And that has been passed along to deposit pricing, and people have been able to demand more for deposits in this weird contagion period in the banking sector.
Yes.
But banks, particularly community regional banks, are going to start pulling back and saying, hey, look, we're either going to cut your rates or we're going to lower your rates, or we're going to hold rates. We don't care what the Fed's going to do.
Right.
Because they can't afford it.
Right.
Right? But what people don't understand is treasuries, the bond market impacts the long end of the, loan
yes.
pricing, right?
Right.
It's index plus margin-based pricing, and none of them are Fed funds plus a margin.
Right.
The index is, CMT, 12-month CMT, 12-month MTA,
or SOFR.
SOFR has been a huge one as of late. LIBOR has obviously gone away. But these indices move independent of the Fed funds target rate. And they're, for loans, the 10-year, the 15-year, the 30-year treasuries, when those move up, it pushes loan rates up.
Right.
And everybody I've talked to, even the most seasoned economists and people that I really like, refuse to believe there'll be upward pressure on mortgage rates by the end of the year. They just won't accept it. And I'm like, well, how then do you get out of the yield curve inversion, which typically precedes and has preceded, we're the deepest yield curve inversion since 1981.
Right.
How do you get out of that? And they say, well, the low end of the curve can go down. Listen up, people.
Break it down.
You just came out of one of the unprecedented periods of artificial interest rate deflation, bringing the low end of the curve too fucking low.
Right.
Okay, the solution here, and all realtors and people in the real estate space, their solution to affordability is low rates, not home values going down, where they get paid off of home values.
Right.
They get paid off the most amount of a loan you can get. Your loan amount is what they get paid a commission off of. They get a percentage of that. The home price, they get a percentage of that. So their solution to this problem is always going to be rates going down, not going up, because they want values to stay up. Because if rates go up, values come down. They're inverse relationships.
Yeah.
And every single goddamn day, someone is in my DMs and they want to argue this theory. I literally posted a question from the broker's exam.
I saw that.
The California Department talking about equilibrium theory.
Okay.
Supply and demand is influenced by the equilibrium of price.
Mm-hmm.
Okay? If price is out of whack, demand goes down. And someone was like, okay, well, hey, and multiple people actually did this. They were like, well, price is part of demand. And I'm like, no.
No.
It's not.
No.
It's not part of demand, because you're telling me that supply and demand influence the market. And we have some data coming up which will talk about more supply coming online and demand has come down, but mortgage rates haven't driven up super high.
Mm-hmm.
Now, what's going to happen when mortgage rates drive up higher? Values have to come down because people won't be able to afford those payments at high prices and high rates.
Right.
It's just a natural inversion, like byproduct of one another, that people just don't understand because they haven't lived through it.
Yeah.
And it's incredibly frustrating to just have the same conversation over and over and over again.
Yeah. I could tell.
Or I'm crazy.
I can tell you really gets you worked up.
It's so frustrating because it's even on the exam, and so many people want to find a way to bastardize the answer.
Mm-hmm.
And it's like, look, dude, like, it's a multiple choice question. This is the right answer. Like it or not.
And it's very important to understand. I know our realtor friends, I would hope they know this.
There's a lot to do.
But for everybody else, mortgage rates will not come down just because the Fed funds rate comes down. That's not how it's controlled.
No.
Right?
No, and I wouldn't expect it to. I think what's going to happen here, and this is a real trip, but I think it's what's going to happen, is right now net interest margin, the profitability for banks, which is where the primary money for our ecosystem comes from, right?
Yes.
It all comes from banks. Your deposits get lent back out, and you can love or hate the fractional banking system, but it is what it is, okay?
Mm-hmm.
That's where most of the money getting deployed comes from, banks.
Yes.
Banks have been strained with net interest margin. They're making less money, less profits. The executives there are making less bonuses. The sales teams there are making less money on commissions. So these people are going to find a way to get more money over time.
Yes.
Which means higher mortgage rates and lower deposit rates.
And they're about to, and these banks are going through a period right now, and will continue to go through a period for the near future, where their net profit margins are substantially lower, if at all. Okay.
Yeah, if they're not losing money.
If they're not losing money, right?
This is a precursor for what they're going to do next to resolve the problem for themselves.
And this is why we've always said on the show, the pain for the consumer comes after the Fed is done, right? Because you gotta imagine. Also, imagine this: if a bank were to make a loan today, for a multitude of reasons, that there's a problem there. The Fed could continue to raise rates like they're projected to do, where now that loan isn't as good as the one that they could make a month or 2 months from now, right? That's number one. Number two, for right now, it's uncertain how long banks are going to have to continue to hold these deposit rates. If the Fed continues to raise rates and you make a loan now and you have to raise your deposit rates again in the future for a second run of contagion, that net interest profit margin is now completely gone.
I don't think there's going to be a second run of contagion.
I hope not.
I really don't.
I'm just saying, but it was hard to believe the first time.
Yeah, I mean, you never know. I mean, it's kind of an unprecedented period of time. Let's get into Elizabeth Warren's comment. I've been kind of foaming at the mouth to hear this again because I like it. So to set the context here, this is from Bloomberg Business. You were ultimately responsible for the what? Go ahead. What?
I was just going to say that I know that he talked about inflation at the House and Senate Banking Committee, but he was mainly getting grilled on bank regulations because the conversation was coming up that the Fed was going to require banks to have an additional
capital,
20% capital, and that was just a number being thrown around that it wasn't finalized.
Which, look, again, I'm not I'm not opposed to banks requiring to hold more capital and all, but I don't think it solves these problems. So I think people are like, oh, Chris, you're a banker. You don't want to do that because it means less. No. It has nothing to do with me being a banker and profits. I don't think it solves the problem.
It doesn't solve
Holding more deposits on the balance sheet
Mm-hmm.
for a contagion run.
Mm-hmm.
Okay, let's look at why the contagion run happened in the first place. Okay, you had people out there like Peter Thiel scaring the market using his social media presence.
Mm-hmm.
That should be illegal right
Yeah.
there. Should you stop short selling on bank stocks? Part of me says yes. Part of me says no. I generally like an idea of a free market and a free economy, and
Right.
intervention like that seems a little artificial.
And to your point about Peter Thiel, why that should be illegal is for the same reason why you can't just run into a movie theater and yell fire.
There are consequences for your action.
Right. If there isn't a fire, obviously.
Well, and even if there is a fire,
I don't know.
I was going to make a Titanic joke. I'm glad I didn't.
Wow.
I restrained myself.
Good job, non-villain.
I did restrain myself. I thought that's insensitive.
Good man.
I'm just stunned at the lack of safety protocols that are there. So
Yeah.
it's I don't mean to make light of it, but it's shocking.
Yeah.
So anyway, Elizabeth Warren, you were ultimately responsible for the team of Fed supervisors who fell down on the job. Senator Elizabeth Warren pressures the Federal Reserve Chair Jerome Powell on the SVB and First Republic Bank failures during his semi-annual monetary policy report to the State Banking Committee. Now, I don't envy his position, and the comments here largely favor Jerome Powell, but I would say most people don't understand kind of the other nuances that we'll get into
Right.
after we hear Elizabeth Warren give Jerome Powell a little taste of her own medicine.
Well, I think the kids like to call it the business.
Yeah, I was going to make a Barney reference because she's wearing purple,
Yeah, and the comments are in favor of JP because
but that would be a very big disservice to
I feel like
Barney.
not a lot of people like her.
They don't like her, and he seems like he's getting bullied a little bit here.
Yeah.
And it's true, he is.
Yeah.
But he slips up and says something stupid. Arun, let's play stupid.
Ooh.
Responsibility for your role in these bank failures?
I think we learned some lessons from the bank failures, and the main responsibility I take is to learn the right lessons from this and to undertake to address them, so we don't have a situation like this where we had unexpectedly a large bank fail and spread contagion into the banking system. That's not supposed to happen, and we need to take appropriate steps to make sure it doesn't happen again.
So I just want to make sure I understand what you mean when you say you take responsibility. Do you take responsibility for your actions that led to the failures of these banks?
Yeah, I think the question of what happened, supervision was at fault. That's both at the board and at the reserve banks.
And are you ultimately responsible for those supervisors? Are you
Actually,
in charge here?
under the law, the vice chair for supervision has
Okay, so you
has
take
sole
no
authority.
responsibility
I didn't
on
say that.
Well, that's what I'm trying to ask. I'm
That's
trying
not
to
what I said.
understand what you take responsibility
I
for.
take responsibility for addressing this situation appropriately.
That's talking about
that's
going
my
forward.
focus. That's my focus. It's going forward.
Yeah, well, that kind of sounds like not taking responsibility for what you've done in the past. You weakened the rules in multiple ways. You reduced capital requirements. You weakened liquidity risk management. You skipped out on using enhanced stress testing. And you were ultimately responsible for the team of Fed supervisors who fell down on the job. You
All right.
take
So
responsibility.
let's pause that there, Arun. So,
You know what he needs, right?
a hug?
No, he needs like one of those White House press secretaries to speak for him from now on. He's
Oh,
like,
yeah.
I'm not dealing with this shit no more.
Miss Warren, Mr. Powell rejects your comment. Yeah.
I'll have to check with Mr. Jerome Powell.
And then you see him whisper to him. Ms. Warren, Mr. Powell says, fuck you.
Yeah, I wish I could do that for him.
Yeah. So she's largely wrong on a
Yeah.
lot of what she's saying here, and she's trying to put pressure on him. But there is some merit to what she's saying. He says he's taking responsibility for taking the appropriate action moving forward.
Addressing, right?
Addressing. So here's what I'm saying. Okay, you're taking an unprecedented path to get here with the methodology you and the FOMC have taken. I keep saying you, but it's the FOMC.
Mm-hmm.
But you haven't explained it, so you have to expect a little bit of people going, why the fuck are we doing it this way? Why are we in such a hurry?
I agree.
Okay?
I agree.
That's a rational thing to ask
'Cause
for people to ask.
Several of the banks that did end up collapsing were well-run banks, right?
Well, then again, we could be bankers and have a bias, but I think First Republic, more than most, was a well-run bank.
They were a well-run bank, and they may have had concentrations to some interest rate sensitive markets, like, for instance, venture capital, right?
Yeah.
So that could be part of the reason. So maybe they were a little too heavily concentrated. We don't know. I wasn't in their books to know. But for Jerome Powell, I'm actually shocked he didn't say we still have economic growth. Jobs are still at all-time high. Like he had a lot of data points that he could have pointed to off the top of his head to be like.
Because if you got in that war, she could have gone straight for the throat, and she didn't. I'm actually surprised she didn't.
Tell me why.
He tried to point to, he said, under the law, there is a different supervisor for bank regulation, but that reports up to him. But he's saying under the law, there's supposed to be a separation of church and state so we can take care of monetary policy.
Yes.
But he knew.
Yeah.
So here's the big disconnect. Here's the big behind-the-scenes action that no one has explained, and maybe one day we'll get an answer to. And I'm fascinated to see or hear what that might be. But the Fed, his regulatory body, okay, all those things that she said that he weighed, that wouldn't have stopped Silicon Valley Bank. They manipulated their balance sheet to stay where they were. I'm not saying that's his fault, but what I am saying his fault is you make these banks stress to 4% interest rate increases by the Fed funds target rate. That's your metric for them to stress in a worst-case event scenario that rates move up in an unprecedented level in a single year.
Yes.
That has been the metric that you, the Fed, the regulator, your arm of your agency that you just acknowledged, that you knew that's where banks stress in a single year.
Yes.
Okay? Now, during Paul Volcker's period, we had 50 basis points, 50 basis points, 50 basis points. We raised interest rates 10%.
Right.
That happened essentially over 2 years.
Right.
Okay?
But
there's no reason why we had to go at the cadence that we went to, an unprecedented series of back-to-back 4 times 75 basis point increase.
So let me ask you this, though. Would you say that Paul Volcker handled it appropriately?
I would say it's easy to look back and say Paul Volcker's right, Jerome Powell's wrong. We might look back and say Jerome Powell did something right. But what I'm saying is you knew you were going beyond the stress thresholds of financial institutions. Those stress numbers, that might just sound like, oh, these banks shouldn't, have all this. Look, you know that everybody's going to try to maximize their profitability. You knew they get constant annual updates and quarterly updates on all these banking institutions. He knew what this type of cadence of interest rate increases was going to do to the banking sector. He knew.
Right.
Part of his job is bank regulation.
Right. But the one thing that he has said and that he has maintained up until now is we don't like surprising the markets. He actually said it at the Senate.
But you did surprise the markets. You took an unprecedented path without telling us in advance that we're going to do it this way because of X.
How far in advance? Yes, I agree. But we have been able to accurately predict each one. But you can't move balance sheets. You can't move balance sheets.
You can't move a business. If he told the markets, hey, look, we're targeting this Fed funds terminal rate by this time.
Right.
Or we expect we're going to have to go here, but we're going to do it a different tact. We're going to ease our way into hyper aggressive Fed interest rate increases.
Right.
Hold it for several, and then try to come back down slowly over time.
Yes.
He could have said the exact same thing, but instead he's chosen to say we're going to hold rates for a prolonged period of time. Why not tell us why you're raising rates?
But
the way
hold on,
you
wait
are?
a minute, wait. The summary of economic projections did list the Fed terminal rate at 5.1 to 5.4%.
Yeah.
I'd like to go back and see how long ago, but I know for a fact at least 6 months ago.
No, it did. But here's the thing: is it didn't. You can get there with 50 basis points, 50 basis points, 50 basis point increases.
But
why are you doing it this way?
Because so when Volcker did it, it caused a double dip recession.
Yeah.
I'm sure at the time a lot of people were like, "Fuck you, dude. Double dip recession? This is crazy."
But during Volcker's era, interest rates got to 20%.
Right. So
hyperinflation wasn't something they were fighting the concept of. They actually had hyperinflation.
Yeah, and debt to GDP ratio was significantly less, so maybe they could have afforded that.
Then tell the American public that.
Yeah.
Be forthcoming. We are afraid of what Volcker went through.
Or if not the American public, definitely the interest rate sensitive businesses. I mean, you have direct access to the banks.
They're not concerned. There's a war going on with regulators right now.
Oh.
The Fed and the FDIC have completely divergent agendas.
They're at odds.
The Fed doesn't want any banks to fail. The FDIC doesn't want to see depositors lose any money, and those two are very competing interests.
Yeah, obviously. Well, the FDIC, we've talked about. I think their fund that they have to save, the depositors should banks go down, could probably only withstand another, 10 banks collapsing. Right? They have like $120-some billion, $130 billion, I don't know, somewhere around there.
And there are 4,700 plus banks in this country.
So 10 banks is nothing.
Yeah, and
nothing.
Not all of them are public.
And I think there's like 40 banks or so that are on their like watch list.
30 is what I heard.
30 or so.
Yeah.
Okay, so if those 30 go down,
Not even if those 30, 10, if half of them go down.
yeah, that's what I'm saying. Half of them go down.
If 10 of them go down.
That's
One
what-
third.
That's what I'm saying. So like, yeah, the FDIC obviously is going to try to do everything they can to make sure that doesn't happen. So the Fed and the FDIC being at odds, and that was something actually that I was really shocked by when I first got into banking.
What?
That these federal agencies don't communicate with one another.
They're supposed to.
It's absolutely crazy to me.
Can I give you a great example?
I have a good example too.
do you
When
got?
I first became aware of it.
What do you got?
When I was spreading tax returns and looking at somebody's cash flow,
Mm.
right? And they have, let's say, like, for instance, a couple weeks ago I mentioned I underwrote a gentleman that was making roughly around $20 million a year in rental income.
Yeah.
And he was paying $0 in taxes,
Yeah.
right?
Writing off all of his interest and depreciation. Yeah.
Writing off all of his interest and depreciation, completely legal. Tax code was written for him,
Mhm.
right? But I know there's looking at some of the properties, you're like, man, some of these expenses are a little inflated.
Yeah.
And then like the fact that we have regulators come in, and they could easily report that to another federal agency like the IRS, but they don't.
No. They traditionally only report suspicious activity reports or SARs,
Yes.
but those are for, I would call, more like concerning things.
So that was something that was really eye-opening to me. I was like,
Mhm.
this is absolutely crazy.
The Fed, the FDIC, the SEC, they see these things.
And I was like, I know that if I'm catching
Never
this,
gets the IRS.
if I'm catching this as a novice, like, this is, I know when.
Well, keep in mind, too, the government sector is so underfunded.
Mhm.
They don't even have the people to handle all these referrals, even if they got them.
I know, and we've talked about that before too.
Yeah,
What was
so-
your example?
Yours is better.
Was it okay?
Yeah, we'll just go with yours. Shall we go on to jobless claims?
Jobless claims. Let's do it.
Or do you want to go higher interest rates hit home prices again?
That one's gonna be pretty long. Let's go quickly into jobless claims because
It dovetails back.
it does.
See?
Yeah.
Dovetails.
Dovetails.
When doves cry. Mm.
Oh, he's getting his riz back.
No, I'm not. I'm sick. Sick as a dog. But I can always get up for Prince.
So the jobless claims report is generally speaking viewed as a leading indicator, okay, and it's an important one that we cite on the show all the time.
Cite the article.
Cite the article. U.S. jobless claims hold at a highest level since October 2021. This from Bloomberg.
Is that your Chris impression?
That was.
It was very good.
Was it?
Yeah, it was good. I like that.
Why? What made it so good?
I just felt like he's a little more authoritative with the delivery. That's
Oh,
good. Yeah, very assertive.
I felt like I had radio man voice.
Well, you're supposed to. You are on the equivalent of modern day radio.
Yeah. I actually really despise those guys. Like, that's not your voice, dude. Just talk normal.
No, Casey Kasem always sounded like that.
I don't even know who that is.
Stop it.
Casey Kasem? Odin, do you know?
Casey Kasem had the
No, I don't.
What the shit?
Yeah, you're old, dude.
There's
I'll
some
tell you,
value.
the only radio voices I know are Ryan Seacrest, Howard Stern, and Chick Hearn.
Kamel Amin Casey Kasem, 1932 to 2014, was an American disc jockey, actor, and radio personality who created and hosted several radio countdown programs, notably American Top 40. He was the first actor to voice Norville Shaggy Rogers in the Scooby-Doo franchise, and Dick Grayson Robin in Super Friends 1973. If you hear his voice,
You think I'd recognize it?
oh, without a question of a doubt.
I lied. I also know I know Big Boy.
What?
Big Boy in the Neighborhood. Power 106.
What does that have to do with this?
I'm just saying I lied. I said I knew only 3. That was the 4th one.
Big
I just-
Boy's been around since he was big.
Yeah, now he's not so big.
No, he's not so big. But yeah, I remember him too. But Casey Kasem was the OG. He was the original disc jockey that made it out.
Really? This is like,
Yeah, Google.
is that like Ryan Seacrest's like Mount Rushmore of disc jockeys?
No, I mean he was purely a radio guy, so it's a little bit different. But Arun, go to YouTube and just search his name, and I want you to hear his voice.
This fucking guy, Ryan Seacrest, he's got so many fucking jobs. And you know what I heard he's going to do?
Hmm.
He's going to take over Wheel of Fortune.
Is he really?
That's what I heard. I'm like, dude, you don't got enough jobs.
That's a lot of places to be.
Come on, man, share the wealth.
YouTube, brother, YouTube.
That was me trying to kill time
There you go.
That was me trying to kill time for Odin.
All right, there you go. Play that bad boy.
From Hollywood, it's America's Top 10 with Casey Kasem. The only weekly countdown of the top hits on Billboard's pop chart. You'll see the hottest videos in the land, along with extra reviews.
Is this his voice or is this?
Yeah.
No.
Okay.
This isn't him?
No.
Special inside looks at the world of pop
Scroll ahead.
music.
Give me some Casey. There he is.
And whose lead singer has a musical connection with the lead singer of Heart. Mike
Nope.
Reno is the lead singer.
I feel like I've seen him make a cameo in a movie. Was he in Happy Gilmore?
2 years ago,
He may have been.
top 10 hit together called
I
Almost Paradise.
I feel like I've seen him do a cameo in a movie before.
All right, well, close this out.
Yeah. This didn't slap the way you were hoping it would slap.
No, man, it brought back a lot of childhood memories for me. It slapped the hell. I mean, first of all, when did we start using a slap on the show?
Dude, well, one of our listeners commented using slap. I was like, oh, that's the. I had to look it up. I was like, let me.
He
Make
was
sure.
like, oh, this slaps?
Yeah, this slaps. I was like, oh, what? And I googled, Urban Dictionary. I said, what does this slaps mean? I was like,
Oh, I
oh,
knew that
okay.
one. Yeah,
Oh,
yeah.
you knew that one?
I knew that one.
How do you know?
I'm also a big fan of Let Me Cook.
Oh, I love. No, let him cook.
No, let me cook, not you.
Oh, okay.
Yeah, let me
him-
cook.
Go ahead. I'll let you cook right here. So this U.S. jobless claims, back to that. Why it's such an important metric and a leading indicator in this space or in the economy, given this time, is a couple of key components. It gives people a snapshot of the current state of the labor market, right? So right now, we have 264,000 claims. These are new claims, right? And just to give everyone some perspective, pre-pandemic levels were between 200 to 250,000. So not a whole lot of change there. If anything, makes the Fed feel good. It makes them feel like there's still more room to operate. Not good for all of us, right? They want to see this number go up. If they see this number go up, maybe they take their foot off the gas pedal a little bit, okay? The other thing that it does, it provides insight into economic health, right? Higher numbers of jobless claims means consumer sentiment is going to start to come down. People are going to be more fearful. People are going to maybe decide to save a little bit more. So this number that came out from this report wasn't very helpful in the Fed's mission.
Well, there's a lot of numbers that come out that haven't really. The housing numbers that have come out recently haven't been too good. Actually, the stuff that came out recently has been the opposite way, which is even better.
Yeah.
So higher interest rates hit home prices again, according to the Wall Street Journal. I'll read a couple paragraphs here. I think this is really good data. U.S. existing home prices posted their biggest year-over-year decline in more than 11 years last month as rising interest rates continued to weigh on the housing market. And we referenced at the top of the show, there was just an article a month ago where people in the real estate business were celebrating the end of price declines as home values had crept back up incrementally over a 2-month period.
Right.
Bro, it's the end. I think it was February, right?
Mm-hmm.
And we're like, don't do that. Don't fall victim to this crazy ass logic. More is coming. And here you are, the largest year-over-year decline in more than 11 years.
So remember, this is the existing home prices.
Yeah.
Not sales. So these reports, I think, can get lost in, because some of the numbers that I'm going to be reading off right after this, you'll be like, wait, I thought you just said it was 3.9%.
No, but I think those numbers actually feed into this pretty well, because even though the sales are increasing, they're increasing at such an incrementally slow pace that it's not keeping up, and I'll explain a little more here.
Yep.
The national median existing home price fell 3.1% in May from a year earlier to $396,100, the largest drop since December of 2011. The National Association of Realtors said on Thursday. Lawrence Yoon kicking me again in the ding-ding. Existing home sales, which make up most of the housing market, increased 0.2%. That's the data that Saied is referencing to, at least in a truncated format, in May from the prior month to a seasonally adjusted annual rate of 4.3 million.
Right.
The National Association of Realtors said Thursday, once again, May sales fell 20.4% from a year earlier.
Right.
That's a big drop.
That is a big drop. In January, that number, though, was 37%.
Now, before you go on, there's two charts. Click that first one there, Arun. Thank you very much. That was very timely of you.
You, sir?
This is a chart of U.S. median existing home price change from a year earlier. And you can see the trajectory is very palpable. Even though it just recently went negative, you can see the trend downward had been building for quite some time.
And worth noting that this was on the tail end of the hottest season of the year.
Yes. So that incremental increase you saw was really the hottest season of the year,
So-
just peaking up above the
Right.
losses.
So when if it were to get seasonally adjusted, I feel like it'd be more flattened out.
Maybe, but
Yeah.
this is what it is. Let's take a look at the other chart. The other chart to me is much more interesting.
Mm-hmm.
This one is U.S. existing home sales by region.
Yes.
So one of the things that I've found to be interesting is that, typically speaking, recessionary economies start on the coasts and work their way into the Midwest. The Midwest has a massive population, but their increases and declines in home values generally aren't as big as they are on the coasts.
Right.
And you'll tend to see that kind of transition. But this particular recessionary economy has been a little bit different, or at least if we'll call it a recession one day, because the West Coast have been so dramatically impacted. I was very surprised to see that U.S. existing home sales by region in the West and the Northeast were actually both very, very low compared to the South and Midwest. Now, I expected the South and Midwest to be high.
Mm-hmm.
So if the volume of sales in the West and in the Northeast have come down, slightly, and you've seen the South and Midwest really prop up the numbers as you're seeing here, because really, if you look at the West, going all the way back to May of 2022,
Yes.
it's only decreased a small amount. If you look at the Northeast, it's only decreased a small amount. But the South has, and the Midwest have propped up the markets. So as this financial impact and consumer discretionary spending pulls back and it starts to compress on the Midwest of the United States and the South, you're going to start to see the impacts of recession being felt, particularly as it relates to real estate values.
Oh, yeah.
This is your best canary in the coal mine in my mind.
This right here, not commercial office space.
No, because I think commercial office space can be impacted without really impacting single-family residences, but this certainly can impact single-family residences. If the number of transactions drop off because affordability is an issue and people are trying to sell their home because they need money, because they have high debt,
Right.
they're going to have to lower their price to get more.
Because I'm thinking about like high metropolitan areas that have, some big names, like we referenced San Francisco, right? Or even like downtown LA. Some of these, these businesses that are in there that are stepping away, big time companies,
huge problems.
Those are anchors.
Yeah.
Right. And
that's how all the foot traffic goes there.
Right.
If
So
Whole Foods leaves and people aren't coming to buy their groceries there, your foot traffic's gone.
Right. Who's going to want to live there if there's not a grocery store right down the street?
Well,
It'd be a pain in the ass to drive however far away to get your groceries and bring it in, right? So that's going to bring it down.
A lot of people get delivered though. So
a lot of people do get it delivered. We
Especially in
actually
San Francisco.
just started that.
Yeah, Joanna's been doing it for a while.
It was actually only like $10 more for our groceries.
And it saves you a lot of time.
It makes complete sense when you're looking to save some time.
Well, plus you get kids in the car and that whole thing on top of that, it just winds up being a lot of work.
It does become a lot of work, but it's also a really cool learning experience for the kids. Our kids love to go grocery shopping.
Yeah.
I personally love going one-on-one grocery shopping with my daughter.
Yeah. My son Carter, he loves cooking, so he has a little cooking thing in his room, like a little kitchen.
Oh, nice.
And every time we go to Trader Joe's, he wants a little cart.
Yeah,
A
yeah.
little cart so he can fill up his own cart.
Yeah, they love some Trader Joe's too. But the fear in the housing market, right, is as home prices go up and the rates continue to stay high, landlords and owners who are paying these higher amounts are going to be passing these on to their renters and their tenants. So that could have an effect on
It certainly could.
on inflation, because we know that
But it won't be enough to move to the target rates of 2 to 3%.
there's not enough transactions.
You need to have real estate values decline. It's just the only way.
Yes.
And I mean, effectively, Jerome Powell's already said that.
Mm-hmm.
I mean, he's been about as transparent as he can be about that topic, at least recently.
Yeah.
Which is unusual for him, because clearly he's not explaining shit.
Unusual for him. That's right. I was mentioning the U.S. office spaces. So this from Bloomberg. U.S. office owners get dire warning. Rebound unlikely before 2040.
Your segue game is a little off there. Are you okay? What's going on?
No, I mentioned it.
You want to talk about it? Fine.
Listen,
You're amongst friends.
I've been doing a very good job as the quote unquote villain of the show at not calling you out for your Riz tonight. Don't call me out, dude.
Okay, well, I didn't want to have to go here, but you still have something between your teeth.
I left that there for you as a fuck you.
No, it's there, and
Yeah.
I've been looking at it for a while.
Yeah, I know. I tried to get it out when I was off camera, but
Yeah, want me to help you out?
no.
Lean over. I'll get out my tooth.
No.
I'll get out.
Come on, no, it's
I'll suck it
okay.
out.
No, aw.
Come on,
Come
man.
on. They just all dropped off.
No, they didn't.
They transferred over to YouTube to see.
There you go. Yeah. Is he
Yeah.
gonna do it? Yeah. I guess you'll never know.
You'll never ever know. So yeah, they're saying that available space for lease in places like San Francisco and Atlanta right now is upwards of 30%.
Yeah.
And
For office space.
for office space, I
Yeah.
only see that number getting higher.
Yeah, that's probably true.
You seem very
Melancholy about it?
yeah, like you don't care.
No, I care, but I think that I don't think the consumer has appreciated how dire the economy is yet. And stuff like this, which should scare them, I don't think they understand. I think for most consumers, the only way to shake them up
Mm-hmm.
is for them to go, wait, my home value is worth how much now?
I don't. But we've talked about it. It's not going to come down enough. First of all, it's not going to come down enough to where you're going to lose all the gains that you've received since the pandemic.
No, but it doesn't need to.
And second of all, it doesn't matter if you weren't planning on selling anyways. It's just it's on paper. You haven't realized it yet. So why do you care?
Because that's what Silicon Valley Bank said.
That's
Mhm.
the message that we've been promoting on the show since day one.
No, I get it. But Silicon Valley Bank said it's on paper. What do we care? We're not taking that loss until we actually sell it.
Well, that was your boy David Solomon's fault.
Well, yeah, he was DJing.
Yeah, he was DJing and he was trying to mix in some Drake, right?
Does he play Drake? Is he?
No, he's
hip-hop guy?
more the number one song I heard him mix in was like a Whitney Houston song.
So you did go listen to his DJ.
I did, of course I did. I had to validate. I was fact checking for the show, research purposes. This is I'm expensing that part of our R&D research and development.
I'll take it out of your salary.
Okay, thank you, sir.
Short bets on U.S. stocks hit $1 trillion, the most since April of 2022, according to Bloomberg. Wagers have paper losses of about $101 billion in 2023.
We talked about this earlier that the S&P has experienced somewhat of a bull market, and people, there's a lot of investors out there that are like, no way, man, this ain't gonna last. So they're shorting a bunch of stocks.
Yes.
Right.
Yeah.
So that's where this is coming
Because
from.
we're going into an earnings recession, kids. Companies are going to make less money. And when they make less money, their stock value goes down. And despite all that, people are betting on you going down, driving your price down before they actually go down because of your earnings.
Right.
It's fucked up.
The problem here too is what happens with these guys that are shorting these stocks. If the stocks don't come down soon enough, then what they have to do is ultimately buy back their stocks, and then it ultimately only pushes it higher.
Yeah.
So it like fucks the system more.
I mean, it's one of many ways. What did you just pull up here? The S&P, broke. Multiple resistance to the upside in June.
Multiple breakouts. And a lot of this is on the backs of these AI companies. Like Tesla shot up.
Look, I think there's a lot of value in AI, but I think this public sentiment of like everything's got to be AI now is just it's too much. It's going too far. It's almost like the NFT.
You do recognize that there is value there.
Oh, tremendous amount of value. But not everything that uses AI is going to be sexy. You know, not everything out there is going to be a winner. So take it with a grain of salt. Now, where I want to see AI I want to see AIs take out call centers. I want to see AI run a call center.
Really?
Yeah.
I hate dealing with that automated service shit.
Yeah,
bro.
but not AI. AI would be different, right?
You would think so.
I think there's a path forward that could be a real thing.
Okay.
You know, will it be good? Not at first.
No, man. I
Could it be good?
I'm that guy degenerate that's just hitting zero. Like, just give me to the fucking operator.
What if you called up and said, like, you called up? What's a great place that has a typical like answering service?
AT&T.
Okay, AT&T, terrible. What about like DMV?
Okay.
What if you call up and be like, hey, I want to know if my fees are they past due? Yes, your fees are past due. Blah blah blah. Here you go. I mean, what if you could just get answers that quickly when you call places now? Or better still, you plug AI into a chatbot.
But just log on now. I mean, dude, we're 2023. Log on to your account.
Right? But let's say you log into a chatbot, and now you can do it with a chatbot that's just very articulate and very. You don't even know if you're talking to a human or not.
Yeah.
That's effectively what ChatGPT is, right?
Yeah, they're gonna have what they're really gonna have to do. I feel like is find a way to make people feel like interacting with an AI chatbot is secure. That's going to be, I think, the most challenging part.
No, I get that, but I got to be honest. I think people are going to be so immersed in augmented reality porn, thanks to Apple, that they're not going to even care.
You really think so?
Yeah. Yeah. Oh, yeah. It's going to be. Like, I saw avatars first come out for like Instagram and everybody else. Like, and now Instagram will sell you clothes for your avatar.
Oh, yeah, that's right.
So you can buy clothes. And that's all leading up to the augmented reality thing, right? Where you're buying like clothes for your avatar.
Yeah, if you want to look cool in the real world, why not look cool in the metaverse?
And, porn always leads the way, which is sad. But, where there's a market, people try to fill it.
Yeah.
And, that's how DVDs got so big and VHS got so big. And that's how streaming services and online, web streaming got so big. And
right.
Look, it is what it is, right?
Yeah.
Can you imagine if some of these people could literally create their own experience by curating what they wanted their person to look like?
Mm-hmm.
It's scary. And then I think, have you seen the stuff that came out about gamers? Gamers that wear headsets too much?
This is crazy.
Yeah, you seen it?
Yeah.
They wear headsets too much because they're constantly on Twitch streaming.
It's just shaping their heads.
They've got a dent in the top of their head from the.
It's
top
not.
headband.
It's not just that. I remember Orun's wife was telling us that like there's an actual term now for people like having neck syndrome for leaning forward, looking down, or the way they hold their phones like this.
Yep.
Their pinky starts to get deformed.
Mine is. It's got a little indentation on my pinky right there.
Yeah, you use this as what? A little placeholder?
My hands are so big.
Really? I just do this.
So now you're better than me?
I mean, some things.
Well, it's
go without
changing.
saying.
Humans are changing.
Yeah.
Humans are changing, man. And it's a scary thing to think that we could, as a species, look different. Arun, you pull it up? Yeah, there you go.
What?
So look at these guys' heads. And the sad part is like, so this started with one streamer shaving his head. And when he shaved his head live, because he was a streamer, right?
He felt the dent.
He felt the dent and was freaked out by it. And then other streamers
Come on, man.
started shaving their head to see it too.
Wait a minute. Dude, you shampoo your hair. He couldn't have. That doesn't happen overnight.
They didn't. Well, some of them have very subtle dents, but some of them have really big ones. But keep in mind, these guys are in front of a screen 9 times out of a day.
So the name of this website is Unilad. I read that as unlaid.
Oh. Arun, you want to say it or shall I?
Good night, everybody.
That's all right, because Odu knows. He's like, I'm about to edit this thing.
Yeah,
this
and I will apologize again. My energy levels are low. I'm feeling terrible. I am sorry. This is not the best show we've done in the world.
And I mean, you go rate the show. Leave us a comment over on YouTube.
Yeah, and
That was a good segue. Nice job.
what? I can't do it anymore. All right, bye.
Good night, everybody.
Bye.